Hello, everyone, and welcome to our first Market Navigator video of the new year from BentOak Capital. As we turn the page and look ahead to 2026, markets are carrying solid momentum and plenty of developments worth paying attention to. I'm Michael Cochran, and in the next few minutes, I'll highlight what stood out recently and what we're watching as the year gets underway. Stocks delivered another strong year in 2025, marking the third year in a row of double-digit gains for many major indexes. That strength is especially notable considering everything the market had to work through, including tariffs. Investors also had plenty of other concerns such as market concentration, high valuations, rising deficits, and persistent inflation. Looking back at 2025, a few key items stand out. History reminds us that bearish outlooks are often wrong. There are plenty of skeptics at the start of 2025, just like in 2023 and 2024. Markets do experience declines, but over time they have risen more than they have fallen, roughly 3 out of every 4 years based on long-term S&P 500 data. Of course, past performance doesn't guarantee future results, but it's an important reminder about staying disciplined and focused on the long term. Stocks tend to follow earnings. In 2025, companies in the S&P 500 grew their profits at a solid double-digit pace, and there's potential for that strength to continue into 2026. That kind of earnings momentum has helped support the market's performance. It's also no surprise that technology led the way, delivering some of the strongest profit growth and in turn some of the best returns. Policy tends to matter more than politics. The volatility we saw last spring, which nearly derailed the bull market, was driven largely by tariffs because they directly affect corporate profits. When many of those tariffs were reduced or removed, markets recovered quickly and major indexes moved back to prior highs. The takeaway: if political headlines don't significantly impact corporate earnings, such as during a temporary government shutdown, they're unlikely to have a lasting effect on the stock market. Big market pullbacks and strong yearly returns can happen at the same time. In 2025, the S&P 500 was down as much as 19% from its record high earlier in the year, yet still finished the year more than 16% higher. Going back to 1980, the index has averaged about an 11% annual gain, not including dividends, while also experiencing an average intra-year drop of around 14%. Keeping that perspective and staying focused on your financial plan and long-term goals can help prevent short-term volatility from knocking you off track. With expectations for interest rates to move lower, that generally creates a more supportive environment for both stocks and bonds. In 2025, the U.S. aggregate bond index gained more than 7% as rates declined, the Federal Reserve lowered its target rate, and inflation continued to cool. Those lower rates supported stock valuations, keeping the S&P 500 trading near a price-to-earnings ratio of about 22 based on expected earnings over the next year. It's important to remember, though, that valuations alone don't do a great job predicting short-term market performance. Looking ahead to 2026, stocks face some of the same challenges they did in 2025. While tariffs may play a smaller role, policy uncertainty around midterm elections could contribute to more volatility in the year ahead. With last year's tax reforms providing fiscal stimulus, the Federal Reserve cutting rates, and significant investment continuing to flow into artificial intelligence, the backdrop remains supportive. Taken together, those forces suggest the potential for another constructive year in the markets, while still reminding us that nothing is ever guaranteed. Be on the lookout for an invitation to our upcoming webinar where we'll take a deeper dive into what happened last year and what we're watching for this year. And if you haven't already, follow us on social media for ongoing updates and timely original content from our team. As always, we appreciate the opportunity to work with you and your family in the year ahead.